A warm welcome to you, my dear children, my dear students. We are at an important junction today. Yeah, we are going to prepare a bank reconciliation statement, and we're going to do a question. We will do a question today from bank reconciliation. Plus, we are going to take a quick look at what we did in the previous session and how these things that you learned in the previous session are going to be used when we do a bank reconciliation question. You got it? Good. Children, in the previous session we studied the five reasons that creates a difference in the balances of our bank account and the bank statement. All right, I hope you remember. We discussed the five reasons. We actually took an example question and we compared our bank account. We compared our bank account with the bank statement, and we noted, we did the cross check, and we noted the missing items or the reasons for that difference in the final balances. Right? If you remember, it's going to be easy for you. Yeah? So today we are going to take those reasons and we are going to blast them apart. No, we are not going to blast them. We are going to adjust them and prepare the adjusted bank account. Afterwards, the reconciliation. Yes, so let's go. Adjusting the bank account balance of the business. Adjusting the bank account balance of the business. Adjusting the bank account balance of the business. Now, don't ask me what is adjusting the bank account balance. So, what are you gonna do? What are you gonna do? Adjusting the bank account balance. How does it happen? Why does it happen? Refer to the previous video. All right. How the bank account balance should be adjusted, or the bank account of our business, which is prepared by our bookkeepers, how it's adjusted, why it is adjusted. All right, I explained in the previous video. Among the reasons that have caused the difference between the bank account balance and the current account balance, that is the statement balance. Let's take it again. Among the reasons that have caused the difference between the bank account balance and the current account balance. Right. I'm going to put pink color for the bank account balance, and I'm going to put, let's say, purple for the other balance, that is the current account balance. Without saying current account balance, you can say the statement balance. Among the reasons that have caused the difference between, that has caused the difference between the bank account balance, that is our bank account, that is the business bank account, right? That is what they are talking about, between the bank account balance and the current account balance. Here, when there is a current account balance, they are referring to the statement balance. Statement. Statement balance. There may be some errors or omissions in the bank account of the business. Due to these errors or omissions, the bank account balance becomes incorrect. Therefore, the bank account balance should be adjusted. This is known as adjusting the balance of the bank account. Same thing, children. Adjusting the balance of the bank account of the business. As I always say, that is our bank account. That is our bank account, right? The T account or the bank book, as we call it, the bank book. We are going to adjust the balance of the bank book. Why? 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 Because there are some omissions, some missing items. How did we find out that there are omissions, that there are missing items? Who told us that there are omissions, that there are missing items? Who? Nobody. We found it. We found it out by ourselves. Yes, that's right. By doing the cross check. We compared the bank account which was prepared by the business bookkeepers, the bank account which was given, bank book of the business. We compared the bank book with the bank statement in this manner. A cross check. Debit side of the bank book compared with credit side of the statement. Credit side of the bank book compared with the debit side of the statement. We did a cross check. Refer to the previous video. And we found out there are some missing items in the bank book, in our bank book. Now we are going to enter them into the bank book. That is the first step, preparing the adjusted bank book. These are the missing items. Direct remittances, standing orders, bank charges. Children, those who watched the previous video, those who got together and learned with me in the previous video, you must be familiar with these three. We found these three. The direct remittances which were in the bank statement, standing orders which were in the bank statement, bank charges also that appeared in the bank statement. These three we found from the bank statement, and we learned about these three separately. Yeah, we are going to enter them into the adjusted bank book. Adjusted, some say updated bank book, some say adjusted bank book or bank account. It doesn't matter. Yeah, right, we are done with this. Let's move on. The bank account balance should increase by the receiving of direct remittances, of course. Let's take it separately. Direct remittances. Receiving of direct remittances. Bank account should be increased. That means our bank account should be debited, right? Debited, yeah. It's here. It's all right here. Remittances should be debited. Debited. Then we have the next item, standing orders. Payments on standing orders and bank charges, both items. Payments on standing orders and bank charges made by the bank. They decrease the bank balance. You know what standing orders are? No, I'm not going to explain again. Why? They were explained really well. Right? So, not repeating again. Not repeating now. Standing orders and bank charges, they decrease the bank balance. They are taken out from our bank account. So the balance is decreased. then they should be credited, right? Credited, yes. Therefore, the payments on standing orders and bank charges should be credited. Now, about what are we talking about? About what are we talking here? Should be credited where? Should be credited in the adjusted bank book that we are going to prepare. Should be credited there in the adjusted bank book that we are gonna prepare. Not yet prepared, right? Yeah. Should be credited. Yes. We get the adjusted balance of the bank account after these adjustments are made. That's right. So we are going to do the adjustments now. All right, children? Shall we? After these adjustments are made. Shall we? All right, let's go. One more step ahead. Here we have an adjusted bank book. Adjusted bank book. It's already prepared. Yeah? Balance brought forward is here. Where did it come from? What is this balance brought forward? Let's see. Children, now, this is the point that you understand. So pay attention. These items were discussed in our previous session. These were the screens which we took in the previous session. As you can see, children, here we have done the cross-checking. If you are not having a familiar sight, or if this is not familiar to you, how about this? There you go. This is where I did the cross-checking, the comparison, the comparing of the bank account and the bank statement. This is where I did it for you. It's like, yeah, like drawing the swords across. Yeah. Yes, okay. Debit side, for the debit side I used the light blue color, okay, and it is compared with the credit side of the statement. And for the credit side I used the light yellow color, and credit side is compared with the debit of the statement. A cross-checking. Okay, that is how we found out the items which were missing. See, these items were already there in the bank statement, so we ticked them, and we traced out these items. 1, 2 from the bank account. They are missing in the bank statement. They are already in the bank account. Missing in the bank statement. Okay? See, children, these are the items which we learned as the reasons. There we go. The reasons for causing the difference. Reasons for causing the difference. Difference in the balances. What reasons did we discuss? These two first. Unpresented checks, unrealized checks. These two reasons first. And I told you unpresented checks and unrealized checks they are missing in the bank statement. Exactly what we found in this screen. See, we found one check which is missing in the bank statement on the debit side and one check which is missing in the bank statement. Another check which is missing in the bank statement. See, in the bank statement, these checks were not appearing. They didn't appear. I'm talking about this check. It doesn't appear here. And I'm talking about this check. The 16,000 check. It doesn't appear here in the bank statement. So they don't appear in the bank statement. These are the reasons in the bank statement. The reasons in the bank statement. Which are these ones, children? Of course, these ones. Unpresented and unrealized checks, which are missing in the bank statement. Then you tell me which ones are the unpresented checks and which ones are the unrealized checks. Can you tell me? Well, let's logically think about it. Students, my dear children, there is one check in the bank account. Here, I'm talking about this check. It is on the debit side of the bank account, which means we have received a check. Received. On the debit side of the bank account. Check number 58. A check which we have received. Yeah? But it is not appearing on the bank statement. It is not here. In the bank statement, it is not appearing. That means it has not gone to the bank. If it went to the bank, it should be credited in the bank statement. But it is not credited. See? It is not credited here. Not credited. Then we use our brains. Okay? We think, oh, this check. It is a check that we have received. Okay. And we have deposited in the bank, right? Yeah, we have deposited in the bank. Check deposit, see? But not realized. They are unrealized checks. Okay. Right. No need to think further. That is it. They are unrealized checks. Alright children, it's easy. If we have deposited and not appearing, those checks are not appearing, those checks are unrealized checks. Okay. And on the other side, the check that we marked, this check that we marked, check number 114, which is on the credit side, that is also not appearing in the bank statement. That is a check that we have paid out. We have issued this check to somebody. We have paid 16,000 to somebody, to a creditor. We have paid from our checkbook. We have written a 16,000 check. And we have issued that check to a creditor. But it is not appearing in the bank statement. Which means we have issued but not presented. So they are unpresented checks. Alright, so we'll mark. These are unrealized. Unrealized checks, these checks. On the credit side, we have unpresented checks. Unpresented. You got it, children? Did you understand? Well, it's not something that is really, 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 really difficult. If you understand these things, you can memorize clearly. Memorize that on the debit side, the checks which have not gone to the bank statement, the debit side of the bank account, in the debit side of the bank account, these checks are unrealized. And the checks which are on the credit side of the bank account, which have not gone to the statement, those are unpresented checks. Okay, it looks like a Vesak lantern or something like that. See, very colorful. All for you, for your understanding. Okay, now back to the place where we were. Then we have these that we discussed. These things that we discussed. Direct remittances. Yeah. Direct remittances. Standing orders and bank charges. That's right. If we consider these things, children, these ones, direct remittances, standing orders and bank charges, and if we go and check in that activity, the example, these ones are here in the statement. Direct remittances, standing orders and bank charges. See? Yeah? These are in the bank statement. They should be entered to the bank account. That is when you understand, right. So these are the items we should take to the bank account when we adjust the bank account to the adjusted bank account. These items. Okay? These items. Direct remittances, standing orders, bank charges. Then let's take them to the adjusted bank account and prepare the adjusted bank account, shall we? That is what is that is the important thing. Preparation of the accounts. Okay, here we go. This is where we stopped. So I'm going to put, I'm going to mark the items which are in the adjusted bank account. First, the balance brought forward is here. Balance brought forward, 31,000. That is the final balance of the given bank account. Okay. If we go back again to that activity example, this is the balance which is taken to the adjusted bank account. The final balance of the bank account, which is the wrong, the balance which is not tallying with the statement. This balance is the problem. So we take this balance to the adjusted bank account and we adjust that balance. Adjust, update. Remember, most of the time I have seen some children doing this. Doing what? They take the opening balance to prepare the adjusted bank account, updated bank account. Wrong. Wrong. Your question, your answer will be entirely wrong. Your answer will be entirely wrong if you take this. Don't take this. This is the opening balance. It's not relevant to us. We are talking about the closing balance, and that is what we should adjust. So we take this balance. All right, children, this balance. Okay, that is the balance that we have taken here to our adjusted bank account, 31,000. and the direct remittance is debited as we discussed. Direct remittance 11,000. Yeah, it is mentioned here. The same why is it debited? The reason is mentioned here. See, the receipt of direct remittances, they increase the bank balance, so direct remittances should be debited. See, that is why it has been debited here. And bank charges, let's take the number one, the one on top, standing order. Standing orders. And bank charges. And bank charges. And bank charges. Bank charges. They are credited. Why? Why? Because when standing orders, when payments are made from our bank account, from the bank balance decreases. And when the bank is taking, always every month taking from the balance of our bank account, they are taking their charges, checkbook charges, stamp fees, stamp duty, for other services that they provide us. They take our money from the bank balance directly. So that also decreases our bank balance. That is why they are credited. See? Decrease the bank balance. Therefore, they are credited. Therefore, standing orders and bank charges should be credited. Here you go, credited. That's it. That's it. We take the debit total and balance the bank account. We balance the bank account. And we take the new balance, which is the balance carried down, as mentioned here. This is the new balance. That is the adjusted balance, adjusted or updated balance. All right. Is it done now? Are we done? I mean, okay, we updated the bank account. The old bank account, the old bank book is adjusted now. All right. All right. Okay. One tick. It's adjusted now. Bank account is updated. So, done. No, children. No, I'm sorry. I'm sorry to disappoint you. It's not yet done. This is the first part of the question. Preparing the bank account, adjusted bank account. Preparing the bank account, which is the updated bank account. This is just the beginning. This is the first part of the question. Okay. The balance carried down is here. Now we need to reconcile the balance. Reconcile this balance. The balance carried down, it is brought forward to the debit side. We need to reconcile the balances now, right? What balances am I talking about? I'm just saying now we need to reconcile the balances. What balances? This balance, which is the updated bank book balance, we need to reconcile this one with the bank statement balance. Okay, if they are different, we need to make them tally. Okay, if they are different, we need to make them tally. That is reconciling. That is reconciliation. We need to tally this 21,000 with the bank statement balance. Let's see what is the bank statement balance. We have done with all the adjusting the bank account balance. Now we are done. That is what we did here, adjusting the bank account. Okay, we are done with all these. This, we are talking about this now. Yeah, have to reconcile or have to make that bank account balance agree with this final balance of the statement. Final balance of the statement. That is why I said it is not yet done. This is only the first part which is done. Preparing the adjusted bank account. Okay. Then the next slide should be the next part. Preparation of the bank reconciliation statement. There you go. Preparation of the bank reconciliation statement using the adjusted balance of the bank account. Using the adjusted balance of the bank account. Using that. This, where am I pointing? I should point here. Using this. Mm-hmm. 21,000. Okay. That's that. We'll use this and we will reconcile this with the bank statement balance. We will reconcile as the next part of the question by preparing the bank reconciliation statement. Well, that is the title of the lesson, right? Bank reconciliation statement. Yeah. Yeah. Now only we got to that. Now only we got to that. Bank reconciliation statement. Now only we are preparing that. Bank reconciliation statement. Using adjusted balance of the bank account. All right. Okay, you think we can go through the text, children. I don't mind. The text is from your textbook. You can go through the textbook. Yeah. Have a look. But I'm not gonna explain and show you examples. Here, to prepare the bank reconciliation statement, I'm gonna take one real question and make you understand by doing the question. Okay? All right. Just before we go to that question, one quick reminder. Now you know that we have taken direct remittances. We have taken direct remittances and standing orders and bank charges. What else are we having from the things that we found? From these things that we found, we have taken direct remittances, standing orders and bank charges. What else are we having? These ones. Unpresented checks and unrealized checks. So you understood, you have understood by now. We have to prepare the reconciliation, bank reconciliation statement using these two. These two. Okay? Right, let's go. We'll go directly to a question. This is how the bank reconciliation statement looks like. We take the adjusted bank balance. We take the adjusted bank balance. Yeah. We take the adjusted bank balance. We take the adjusted bank balance, which is the 21,000. Yeah. And children, we add the checks unpresented. Which are the unpresented checks? Just now, a few seconds ago, I showed you the reasons, the 5 reasons. And out of those 5, these 2, unpresented and unrealized checks, those 2 should be entered to the reconciliation. No? Out of those 2, the unpresented check should be added. Unrealized checks should be subtracted. Let's find out why do we do this with a question. The question is on the next slide. There you go. This is the question. Well, this is in your textbook. This is a textbook activity. You can open your textbooks and get together and do this question with me. Shall we? Don't be lazy now. We'll do the question. Come along. Come up with some A4s or a book, a blank page, and a pen. Yeah? I'll wait until you get prepared. All right. Let's go. Sevandi Pereira's business has a favorable bank account balance of 45,000. Children, this is the bank account balance. Children, this is the bank account balance. Bank account. Right? This is our business bank account. Business bank account balance, and it is a favorable balance. Favorable balance means positive balance. There is money in the bank account. Money is there. Favorable balance. 45,000, huh? That is the balance brought forward in the bank account at the end of the month of July. However, the statement has a different balance. That is the problem. However, the bank statement has a different balance. That is the problem. Following reasons are identified for this difference. We have some reasons now. We have some reasons here. Some reasons are given. Let's check out the reasons. Checks which are deposited but not realized. Checks which are deposited but not realized. Now you tell me a word, a name. One word, a name for this. Checks which are that have been deposited but have not been realized. Tell me. Unrealized checks. All right, unrealized. Oh, yeah. We had a long explanation. We had a long descriptive explanation about unrealized checks in several places. Yeah. So I'm not gonna say what unrealized checks are here. I'm just gonna write unrealized checks. Unrealized checks. Yeah. All right. Then 7,500, 8,600, 2 checks are there. unrealized checks. Now, if you are guessing, all right. Where should these be entered? In the updated bank book or in the next part, the bank reconciliation statement? I told you several times. I told you this several times. Unrealized checks and unpresented checks go to the bank reconciliation statement. Yeah. Let's check what other information is given. Checks have been issued during the month but not been presented. Name. One word for this long sentence. Unpresented checks, that's right. Just like unrealized checks, they have given on this side unpresented checks. Yeah. Unpresented. We have two unpresented checks, children. Just like the unrealized checks, two unrealized here. On the other page, we have two unpresented here. 1, 2. Right? Now, it's very helpful if you jot down, if you note down on the book itself. Oh, if you got this question on a paper, just note down somewhere here. Unpresented and unrealized checks go to the bank reconciliation statement. So these two go to the unrealized and unpresented. Both items go to the reconciliation statement. Okay, not to the adjusted bank book. Now let's see what other information is provided. Following items appeared in the bank statement which are not entered into the bank account. I get a clue. I just have a clue. These things must be those. Those things must be these. Yeah. Yes, exactly. Standing orders. Standing orders. And now we get the things to enter into the adjusted bank book. Direct remittances, bank charges. Yeah, that's it. Adjust the bank account, prepare the reconciliation statement. Two things to do. Two things to do, and we are gonna do it right now. We have a blank page. It's all ours now. The question. Yeah, let's do it. The question. We need to prepare the adjusted bank account. Adjusted bank account. So it's all ours. Full blank page. Let's prepare the adjusted bank account. Draw the T first, as always. Draw the T. Small things lead to big things. Small things lead to big things. All right. Children, I'm drawing this full format of a ledger account. Full format of a ledger account for the adjusted bank account. or updated bank account. I'm drawing this. But in the examination, if you get to prepare an adjusted bank account or updated bank account, even if you draw a T, just a T account, just like this, it doesn't matter. Your marks will not be deducted. Even if you draw a T, instead of this full columns, full format of the ledger account, instead of this, if you draw this, even doesn't matter. Okay. Updated bank account. All right, let's name the columns. Date, details, rupees, again date, details, rupees. Yep. All right. Now, how are we going to start this? With what are we going to start this? The balance brought forward. Which balance? Well, just like I said, the given balance in the bank account. Given balance in the bank account, not the opening balance, the closing balance of the bank account. But no balance is given. No bank account is given. Let's check the question again. No balance is given. No balance is given. The balance is given. It is given. It's here. See, I have even drawn the T, the bank account, the T account here. Yeah. Just to show you that that is the bank account balance. Okay. So the balance of Sewanti Perera's business is 45,000 at the end of the month, July. That is the closing balance. However, the statement balance is different to that. So we are going to take that and adjust. We are going to take it and adjust. Rip it off. Well, not rip it off. It's not a bomb squad to blast it off and rip it off. It's just a bank reconciliation. So we'll record the balance brought forward 45,000 in the debit side because it's a favorable balance. Favorable, positive. They have said, they have mentioned it here. Sewanti Perera's business, favorable bank balance 45,000. Favorable, children, favorable. Okay. Favorable. That means positive. It's not a bank OD. If it is a bank OD, that 45,000. If it is a negative balance, bank OD means negative. If it is a bank OD, if it is a negative balance, brought forward should be on the credit side. But no need because it is a favorable balance. So no need to go to the credit side. Balance should be on the debit side. 45,000. All right. Then we took this. Okay. And the bank statement has a different balance. Following reasons are identified. First reason, unrealized. We don't take unrealized checks to the bank account, to the updated bank account, adjusted bank account. No. Unrealized checks should be taken to the reconciliation statement. Then we have unpresented checks. No. No. We don't take unpresented checks to the adjusted bank account, updated bank account. No. Then we have these. All right. These are the items. These are the items we take to the adjusted bank account. These 3. 1, 2, 3. No need to say these things again and again. I explained why these things are taken. I showed you why. I showed you these items. In the example exercise we did. Yeah. Right at the beginning also I showed you. First, standing orders. All right. We have a standing order of 8,000. Should be entered in the adjusted bank account. Which side? Which side, children? Debit or to the credit? Credit, right? Right? Credit. Of course, credit. Standing order should be in the credit side. Why? Because these are payments. Payments. Payments done by the bank according to our order, our given order. We ordered the bank to pay a certain amount for something at regular intervals, at regular periods, like at the end of each month. So the bank pays every month. Money goes, bank balance goes down. Here you go. This is what we're talking about now. And the next is bank charges. Okay. Let's enter this standing order of 8,000 in the credit side. Standing order 8,000. Done. We'll take it. Direct remittances, we have direct remittances 8,000 again. Direct remittances 8,000 again to the bank as dividends. And we have direct remittances. Direct remittances of 8,000 and to the bank as dividends of 4,200. All right. In the book, children, there are two direct remittances mentioned. Right? It is a little confusing here, but we'll adjust it. No problem. We'll adjust this as another direct remittance. So the second information here, it goes like this. Direct remittances of 8,000. Okay, direct remittances of 8,000 to the bank, and as dividends of 4,200, and as dividends rupees 4,200. Direct remittances of 8,000 to the bank and as dividends and dividends of rupees 4,200. I adjusted this sentence just to make it clear to you. Okay, dividends. Now children, if you don't know what dividends are the profit share of a company which is paid to the shareholders of that company. As businesses, we can invest our money to buy shares. When we buy shares of other companies, okay, let's say we bought shares of a company. We bought some shares of let's say Sampath Bank. So we become shareholders of Sampath Bank. At the end of a period, at the end of one period, accounting period, let's say at the end of 1 year, out of the entire profit of the company, profit of the Sampath Bank, we get our share of the profit, because we are shareholders now. Okay, those profit shares are called dividends. Dividends are directly sent to our bank account, to the shareholders' bank accounts by that company. Likewise, we have got dividends of 4,200. Okay, now we know that direct remittances are money coming into the bank account. So money coming in means balance increased, balance increases, which means it's a debit. Let's go and record the direct remittance of 8,000 and dividends of 4,200 in the debit side. Direct remittance of 8,000, dividends of 4,200 in the debit side. Okay, done. That is also done. Then we have bank charges, 2,500. We know bank charges are taken from the bank. The bank always takes the money for their various services, and they deduct from our bank balance. They take the money from our bank balance. It's not very, it's not very good news, right? Yeah, always when the bank statement comes, when the bank statement comes to the businessmen, I have seen how they react. They open the envelope, they take out the bank statement, they open the bank statement, and they look at the bank charges and they say like, oof, again they have deducted this much money taken out from our bank, from our account by the bank. How much? 2,500 should be credited. Bank charges, 2,500. Yeah. Now we are done with all the items in the bank adjusted bank account. We are done. Okay, these ones. Let's balance it off. Draw the sum boxes. Take the sum total. Sum up the higher, the greater total. Obviously, the greater total is in the debit side. It is in the debit side. It is 45 plus 8 plus 4,200. So 45 plus 8, 53, 57,200 is the sum of the debit side. 57,200 is taken to the credit side. Both sides should have the same total. That's why we are calling it balancing. Now it's balanced, but what is the shortage here? The difference. 57,200 minus total of this side, total of the credit side. 8,000 plus 2,000, 10,500. Take the answer. 0, 0, 7, 6 4 46,700. That is the balance. Balance carried down. All right, done. We completed the updated bank account or adjusted bank account. Now it's only a matter of preparing the reconciliation statement. Okay, 46,700 is here. We take that adjusted bank balance or updated bank balance to the reconciliation statement, and we start the reconciliation with that. Okay, let's start the reconciliation. The reconciliation statement has a very simple format. One wide column for descriptions, two narrow columns for amounts. That's it. Okay, not even a header, not even a column for headers. I mean, it's not needed. A separate row for headers is not needed. Just name it as bank reconciliation statement. Bank reconciliation statement. Okay, start the bank reconciliation statement with the adjusted bank account balance. We write balance as per adjusted bank account. 46,700. 46,700. It's coming from here, from the adjusted or updated bank account, the final balance that we calculated. Okay. Yeah, now we have to go back and check what items should be entered in the reconciliation statement. Back to the question. Unrealized checks and unpresented checks. I told you that it's better if you can jot down near the unrealized checks and unpresented checks. If you can jot down that these items go to the bank reconciliation. I told you earlier when we started the question, these two items go to the bank reconciliation statement. This goes to the recon, and this also goes to the recon. Now we are going to take those. Okay, now let's see. Children, we have an adjusted bank balance at hand. We have the adjusted bank account balance now. It's entered in our reconciliation statement, the adjusted bank account balance. Okay, it is 46,700, and we have two checks which are unrealized. Unrealized means we have deposited these checks in the bank account, but the bank has not yet realized these checks. In other words, the money of those checks has not yet been collected and added to our account. But as you remember, children, I told you that unrealized checks should be subtracted. See, less unrealized checks. Why? Why do you subtract? There should be a reason for the things that we do. Yeah. Why? Okay. Let me give you a very quick explanation. Children, now, no, back then, when we made this example, when we worked out this example, I told you that unrealized checks are on the debit side. These checks, unrealized checks are on the debit side. That means we have debited. Our bank balance has increased, but bank statement has not taken them yet. So the bank statement balance is down here, not yet increased by 14,000. But our bank account has increased because we have recorded. Bank statement? No, still here. So we should take them off, take them out, subtract the unrealized checks to get to this balance. That's the explanation. Quick one. Yeah, a very quick one. Okay, let's subtract this 7,500 and 8,600 as unrealized checks. Less unrealized checks. 7,500 8,600. Total should go to the next column to be subtracted. Total should go to the next column. What is the total? What is the total? 8,600 plus 7,500. 16,100. Then take the unpresented checks. These ones. Earlier again I told you that unpresented checks should be added. Here I told you added. Unpresented checks not presented, see, should be added. Added. Why? Why do we add? Why do we add them? There should be a reason for everything. When I do a question, when I teach you some accounting point in the lesson, I always give you the reason for it. Okay? That's for your understanding. You don't buy heart accounts and accounting procedures and the practices and the way you do a question. You have to practice with the understanding. You don't go like parrots by memorizing. This should be there, this should be here, this should be here, this should be here, that should be there. No. Not like that. With the understanding. So, why do we add the unpresented? Let's see. Just like earlier, I'm going to explain again. A quick one. Why do we add unpresented? See, unpresented checks are on the credit side of the bank account. There only we marked the unpresented. See, I have marked the unpresented here. Unpresented checks, 16,000. Yeah? The 16,000 of checks are credited to our bank account, which means we have issued checks to creditors. And because when the checks are issued, our bank balance decreases. We have credited, and the bank balance has already decreased. Even though our bank balance decreased, those checks did not go to the statement. No. That's why the statement, in the statement, they are not appearing. These checks have not gone to the statement. So the statement balance is still here. Statement balance has not been decreased. Okay, so to come to the statement balance, you should add this unpresented checks again. That's why you add unpresented checks. Is that the reason? Okay, right. That is the reason. Who gave that expression? Who understood this? You understand these things, the theory behind these practices. If you understand, if you get these things clear, you can do any question in any way. All right. That's why we are going to add the unpresented checks, just like it's given here. Unpresented, add. Okay. We are going to add the unpresented checks. 11,400 and 8,600. 11,400 and 8,600 unpresented checks. Add. $11,400, 8,600. Take the total to the next column. Take the total to the next column. What is the total? $11,400 plus 8,600. So it becomes 20,000. All right. After you have taken the totals of unrealized checks and unpresented checks, what you do is you do the math. You do the first subtracting. This one should be subtracted, so the amount should be within brackets. Normally, usually in accounting, subtracted items are shown. Usually subtracted items are shown likewise within brackets. Subtract 46,700 from that, minus 16,100. This answer is 46 minus 16,100, 30,600. 30,600. Did you get that? Did you get this? 30,600. Now, some children must be wondering, sir, why are you doing the subtracting one here on top and adding unpresented checks? Why is it in the bottom? In the book, it says, the adding of unpresented checks is done first. This is first. Adding of unpresented. Then only you subtract unrealized. But in your answer, you are subtracting first. It doesn't matter. I mean, it doesn't matter. It's not a problem. You can add first and then subtract the unpresented, subtract the unrealized. It's the same thing. Okay, even though you subtract first and then add the unpresented, it is the same thing. You get 30,600 and you add the unpresented 20,000 to this. So you get 30,600 plus 20,000, 50,600. The final answer. All right. You write balance as per bank statement. Balance as per bank statement. Voila. That's it. Okay. Now we did updated bank account and bank reconciliation statement. From the updated bank account, we updated the bank account balance by entering the missing items to both sides. Okay, and we took the updated bank balance. We took the updated bank balance to the reconciliation statement. To the reconciliation statement, and we reconciled this balance to the statement balance. All right. We don't know the statement balance. In the question, it is not given. It is not given. We don't know whether it's the actual bank statement balance, because the bank statement balance is not given. If the bank statement balance is given, we can confirm it. But here the bank statement balance is not given. They only say, however, the bank statement had a different balance. That's all they say. That's the only thing they say. However, the bank statement balance bank statement had a different balance. That's all they say. They don't give the bank statement balance. That is why when we took the final answer here, there is no way to confirm this. Yeah. Anyhow, the procedure, the system, or the way you prepare a bank reconciliation statement is now explained. Done deal. I hope you understood this, children. I hope you understood this. The first activity, which is in the reconciliation part of the book, activity 3, we did it in a very descriptive manner, taking a lot of time. Yeah. We prepared the adjusted bank account and we prepared the bank reconciliation statement as at 31st July using the adjusted bank account balance. Bank reconciliation statement prepared. This is it. And finally, the balance as per bank statement is taken as the final answer. Okay. Children, these questions could come in different ways. This is not the only way the bank reconciliation question is going to come. It could come in a different way. So we will do another question. We will do another quick practicing question in the next session. Until then, do your work, enjoy accounting. If you get a question, if you get an issue, a doubt, comment in the section below the video. we are definitely going to do one more bank reconciliation question, right? Until then, hope to see you soon. Thank you very much.